So for the breakdowns of portfolio, asset class, country, sector, and theme are applicable for both a stock and a fund. And now we're going to talk about something that applies only to either just stocks or just funds. So for stocks, it's industry and sub-industry. And for funds, there are types, universe, and styles. So when we talk about the industry for stock, they are one level below the sector. So the relationship will be sector, industry, and sub-industry. So within the sector, you have different industries that all belong into that sector. And under industry, you have the sub-industries that belong to that industry. And here in our breakdowns, the industry and sub-industry are only applicable for stocks, but not funds. So in this case, when you click into the industry breakdown, you will see that half of the portfolio will be in funds, and we show the 50% in funds. And then for the other 50% that is allocated to the stocks, we show their allocations across different industries. So you will see here 20% of the portfolio will be in textile, apparel, and luxury goods. And that is because both Adidas and LVMH belong to this industry. And scroll down, you'll see other industries here such as IT services. And now let's click into the sub-industry. Now in some cases, sub-industries are same as industries if there is no level below. But in some other cases, when the sector is a large sector and there are many different models inside that sector, and that is typically when you have the sub-industries different from the industry names. So a good example here is Diageo is in the sector of consumer staple, industry of beverages, but in the sub-industry of distillers. And that is because the beverage industry is so diverse, and within that industry you have different types of beverage companies. And distiller here is one of them. And once again, this level of details is quite useful, especially when you care about diversification insights. Now moving on to 3 fund-specific breakdowns. And let's start with the first one, fund type. By fund type, what I mean here is that the funds allocate their assets in stocks, fixed income, multi-assets, or currencies, or any other asset classes. And since here all the 5 ETFs invest in equities, their fund type is equity fund. And why this is important? Simply, it tells you that all of your allocations today in this example portfolio go into funds by the end of the day. Even though on a superficial level you have 5 stocks and 5 ETFs. But as a matter of fact, those 5 ETFs invest in stocks at the same time. So if you want to invest in some bonds or currencies or real estate, this example portfolio tells you you currently don't have the allocation yet. And that is when this particular insight is very useful. And moving down to fund universe, inside the funds we have different types of universe, such as exchange traded funds or mutual funds or investment trusts. And in this case, we have 5 ETFs, and that's why you see 50% of the portfolio in exchange traded funds as their fund universe. And once again, if you want to invest some money in investment trusts or mutual funds, and this tells you that your current allocation does not have those, and if you wish, you may want to diversify away from just stocks and ETFs and into some other different asset classes. And lastly, we have fund style. By style, it's basically the difference between passive and active. And by definition, the exchange traded funds, they're passive funds since they passively track the performances of the indices. Whereas if you invest in some investment trust or mutual funds, that's where the funds will become actively managed. It's not the most critical insight you need to care about, but it's just very useful when you care about the fees. Because traditionally, when you buy an actively managed funds, the fees you end up paying are usually higher than paying for a passive fund. And once again, you can always click into this breakdown section here to see the detailed allocation by different security and their weights in the portfolio, as well as which of these breakdowns they belong to. Hopefully you will find this breakdown section useful and use the diversification insights you get here to help you better manage your money.